I'm going to have, so this meeting, the format's going to be a bit different. It's going to be a presentation. I'm going to do giving some context and information about altcoins and kind of explaining what they are. Then after that, we can have a discussion to kind of talk about any more questions or any details that people might not understand. And then finally, I guess at the end, kind of as like a activity or a bit of a game to apply what we learned, we're going to try and come up with an altcoin or maybe say features that we would like to see in one if we had to make one hypothetically. So I guess, yeah, in a few minutes, we'll start the presentation. So it shouldn't be too long today, maybe the whole meeting, 30 to 40 minutes, but I'll wait till, how many people are in the meeting right now?
12.
Okay, 12. I'll wait till 10:05 and then I'll start the presentation.
Yeah, I think you can go ahead. So probably those who plan to be here are here.
Okay. So first to go over what is an altcoin. I don't know. I'm sure people have heard the term, but I guess what altcoin means or what it stands for is alternate coin. So it basically means any coin that's not Bitcoin, because Bitcoin is the original, Bitcoin's the biggest, and Bitcoin is the most well-known. So an altcoin refers to any cryptocurrency which isn't Bitcoin, and they come in varying levels of success. So I'm sure almost everyone's heard of something like Ethereum, because it's the second most popular and probably just as well known. However, there's literally thousands. So there's a lot which might not even be known by anyone. So a lot of them are
designed. Did you say
designed
thousands or hundreds?
It could be more than thousands, like it could be tens of thousands.
Really?
I'll get to that later. Yeah. So they're designed to overcome Bitcoin limitations, meaning if someone sees like something wrong with Bitcoin or a shortcoming or an area which it could be improved, people can make a altcoin to kind of try and fix the problem and maybe make a superior currency or make a coin that fills a niche missed by Bitcoin. For example, if someone wants to like maybe make something designed to exchange money between businesses, Bitcoin may not be optimal for that. So they may create a coin designed to fill the niche, just like someone may create, a company or like a tech service, which fills a niche different than like the general consumer market or any niche, not necessarily consumers or businesses. And another point about them is that they're very easy to make. If you have like the knowledge, the technical knowledge, one can be made very quickly. So there's a lot of ones which kind of aren't really original or are basically copy and pasted. So yeah, when I said there was thousands, someone who's really determined can just make one basically in a day. So there's a lot kind of that are spam and which don't really introduce any new ideas, but can still be traded. So there's a lot because not all of them are as big as Ethereum or Bitcoin. So yeah, there's like tens of thousands. So different types of altcoins, kind of going off what I said earlier, different altcoins fit different purposes or are created for different reasons. So in terms of the very popular ones, like I said, Ethereum is also very big, almost as well known as Bitcoin, and also nearly half of its market cap at 347 billion currently. So to go over some that fit specific niches, something like Monero was designed to actually be more private and have better privacy and security than Bitcoin. So it functions similarly. It has a price. The price fluctuates with demand. But the difference is it was designed basically in a similar way, still on the blockchain, still can be mined. However, it has a bigger focus on privacy. There's an example of USD coin, which works basically completely differently. It doesn't really have price fluctuations. Rather, its value, one coin, is meant to be the same as one USD. So the price fluctuates basically, I guess you could say, with inflation, because if USD goes down, then USD coin will as well, because it mirrors its value. But it has advantages, as in, like hypothetically, if you're paying rent with it, then if you're paying rent with Ethereum, one day your rent might be 0.001 Ethereum, but the next might be less or more because the price of Ethereum fluctuates. But USD coin will kind of not work that way. But I guess in that case, its disadvantage is inflation, but it serves a purpose, and it's a different purpose than something like Bitcoin or Ethereum. So that's why it was created. And then we have what are called meme coins. So I'm sure a lot of people have heard of Dogecoin, which was initially created as a joke. but I guess the way it worked out with I guess the community, this coin, which doesn't really have any advantages or technological features over something like Ethereum, was just basically chosen by the community to be pumped and dumped. So a bunch of people started investing, the price went up, it kind of got famous and had a lot of attention. So it kind of got a famous status because people were using it to make like really big investments, and its price was fluctuating. But initially it was created mostly as a joke, and it just happened to be the one that people chose to invest in. But it doesn't necessarily have any specific advantages or technical achievements. So some statistics, yeah, there's 10,000 plus. That's like not even necessarily a definite number, because those are just the ones traded on one platform. But like you can literally make one or copy and paste one, change a few things, and that could be considered a new one. So most are unoriginal due to the relative ease of creation. So there's a lot, but there's only maybe a few hundred or a few thousand which are seriously traded and like have a market cap over maybe $1 million. Okay, yeah, going over the market cap. So from the total market cap from the three biggest altcoins, which is Ethereum, Tether, and BNB, all of those added up is around $500 billion. So that's just the three biggest behind Bitcoin. So they are legit, like they do have value. Not all of them are just completely jokes. And forks, which is something I'll go over shortly, is another concept, which is what a lot of altcoins are based off of. And there are over 105 Bitcoin fork projects in total. And out of that, 74 are still active. So to talk a bit more about Ethereum. So Ethereum itself isn't actually originally a coin. It's a platform which allows for a few interesting things to be done. It allows for smart contracts, and also it allows for basically apps to run on that network using the blockchain technology. So, and the coin is just based off of that platform. So like the coin kind of came second, however, it is very successful. So I guess to go a bit deeper into smart contracts, I can't really give the full explanation because it's pretty in-depth, but on the Ethereum platform, companies or entities are allowed to make contracts where there's not a third-party mediator. I think we talked about this as well in the first meeting. There's a way to basically, if you want like to get a loan or to make a contract, usually without blockchain, then there needs to be a third party which agrees on the terms and then releases the funds or marks the contract as completed when the conditions are met. However, Ethereum kind of lets that be done on the blockchain, where there doesn't need to be a third party. The agreement can be created between two parties. And then if the conditions are met, the contract is fulfilled automatically by the blockchain. So it allows kind of for decentralization. There's not really like a power difference. It's just a fair way to do contracts. But again, also Ethereum, the platform allows for the coin. And one really interesting thing about it is the coin itself actually saw a update, which is possible with crypto technology. It went from proof of work to proof of stake, which was very important because proof of work is currently the way Bitcoin operates, and it's a competitive system. And I'll go into more differences on the next slide between the two. But I guess to go into the like the results and the advantages of going to a proof of stake system is Ethereum ends up being a lot more environmentally friendly than Bitcoin. So that's one of the biggest arguments people have about Bitcoin, or kind of they bulk it all into one group, crypto as a whole. They say that it's really bad for the environment, the energy draw, and I guess the emissions as a result of the energy draw are really, really high. And that's a lot of people, that's a big reason a lot of people kind of argue against it, but there are ways to make it more environmentally friendly, and Ethereum is an example. It's still very big, but its energy consumption is a lot less. So to go over proof of work versus proof of stake. So the way proof of work works, it's both are competitive systems, but basically proof of work, to outcompete the competitors, you need to use more computing power. So everyone knows to mine, you need to solve these calculations, but on Bitcoin with proof of work, basically the calculations are very difficult, not because they're necessarily needed to run the system, but because if they weren't that strong, then security would be compromised and people would be able to interfere and maybe even manipulate blocks and kind of cheat the system easier. So the way kind of the whole blockchain as a whole works is the reason someone can't, like, say, make a block that gives them a Bitcoin or doubles their money or doubles their wallet, is because everyone's work is being checked against everyone else's. So if you wanted to add a malicious block, you'd need to have a computer processing power more powerful than half of the network. So if you had, like, something 51% as powerful as every other computer mining Bitcoin, then you would be able to kind of trick the system and create a malicious block, and that would be very devastating. So, but obviously there's so many people mining Bitcoin that you'd never have that much power and you'd never come close because it's just so competitive. And Bitcoin with proof of work also works in the way that the first miner to solve the puzzle is giving a reward for their work. So they'll actually get part of the new Bitcoin created, or they'll get the new Bitcoin created as a result of their mining. So the reward's really big, but again, it's really competitive and it takes a lot of energy because there's so many people trying to do it. So proof of stake is what Ethereum uses, and it's a bit different. There's no competition as the block creator is chosen by an algorithm based on the user's stake. So instead of staking or verifying your work through computing power, you actually have to stake your own Ethereum and kind of use that as the collateral to manage the system. So instead of needing 51% of the computing power to make a malicious block, you'll need 51% of the Ethereum, which again is very difficult and realistically impossible. So the security is just as good, and the rewarding, how you get paid, is a bit different because there's no block or no Bitcoin or no coin given to you if you complete the block. Rather, there's just a transaction fee. So it's smaller, but there's also less resource intensiveness. So I think it's still just as profitable in theory if you get the reward. So there's also Bitcoin Cash, which is another altcoin that we'll go into a bit of detail. And then the previously mentioned topic of forks, which I'll explain now. So in terms of the coin itself, or the currency of Bitcoin Cash, its advantages are that it has a much higher transaction speed. So with Bitcoin, if you're just doing it, they have Bitcoin has like kind of third-party services and advancements like Bitcoin Lightning Network, which allow transaction speed to be much higher. But if you're just trading Bitcoin itself without any additional tools, it can actually be quite a bit, depending on like how big the load is at the time for Bitcoin transactions to go through. Like if you send, I don't know, an amount of money, the fees are always going to be really small, but it can be quite a bit of time, like maybe I think up to a day before the transaction is fully verified and fully goes through to the wallet receiving. So Bitcoin Cash was created to have higher transaction speeds and have lower fees. So the fees from Bitcoin are already pretty small, but like Bitcoin Cash has it lower. So Bitcoin Cash is an example of a fork. And a fork basically means there was an original cryptocurrency and there was a change that I guess part of the community wanted to make. So again, like going back to kind of the proof of work, there has to be like a majority consensus on that network to make a change. And then basically the miners, the people who are running the system, can implement a software update. And then if enough of the people do that and then start mining using the new software, then they're going to be able to basically create the new currency with the new rules and the blockchain, which runs on the new philosophy, or the new kind of design. So Bitcoin Cash was actually a derivative of Bitcoin itself, and then actually Bitcoin Cash itself forked into two different programs. So when you hear the figure that there's like 10,000 altcoins, a lot of them are actually forks of previously established cryptocurrencies. And there's different types of forks as well. I don't know if I want to go into all of them, but some of them can actually just straight up copy and paste existing code and then modify it in some way. So like hypothetically, you could make a Bitcoin fork not by kind of changing like the computer's mining it or changing the software the computer's mining it, but just taking the code, modifying it, and then starting it as a new coin. So there's a few different ways, but ultimately it's kind of just like an update or a revision or a modified version of an existing coin. So should you invest? A lot of people who want to get into crypto don't know if they should just buy Bitcoin. They don't know if they should buy a big altcoin like Ethereum, or they don't know if they should just, kind of go big or go home and just find a really cheap altcoin that not a lot of people know about and hope that it will become the next big thing. So the established altcoins, the big ones like Ethereum, Litecoin, they seem to follow the market trends, basically the general stock market and Bitcoin very, very closely. So if you look at the image on the left there, where it's the two lines, the two graphs, the one is the one on the top is Bitcoin and the one on the bottom is Ethereum. You can see that they almost look identical. Like when one's going up, the other one is as well. There's a bit of the differences in like the finer details, but overall Ethereum will follow the price of Bitcoin very closely. So in some cases, like one will fall harder, the other one will rise quicker, or it won't be as extreme. But in general, I think if you want to invest in like Bitcoin versus Ethereum, there's not too much difference. You're not going to make too much more gains because they're almost the same. And also both of them typically will follow the general market pretty well. If there's like a really big financial crash, then they'll also probably usually go down. So I wouldn't say there's a clear advantage for altcoins there. Additionally, many serve like a specific function and aren't ideal for investment. I guess using the USD coin example again, like you can't really invest in that. It's meant to serve a function of being like kind of a digital dollar. So it's not going to, in fact, if you invest in it, the value is only going to go down with inflation. So there's a lot of altcoins which kind of serve niches which aren't even meant for investment at all, or you can't really invest in. So however, there's also like the really small ones like Dogecoin. One reason it was popular and one reason it was pumped so much was because its price was always under $1. So, if you want to buy a Bitcoin, you can buy like fractions of one. You can buy really small points because one Bitcoin is like $50,000. $50,000. So realistically, if you want to invest, you can buy portions, but like you're never going to really be able to own more than one unless you were in really early. So the idea with altcoins, or especially the small ones, is you can basically get in early while like they're all still really cheap and pennies for just one coin, and then buy a lot, have multiple coins, and then hope that they go up. So I guess it's a similar concept to penny stocks where they're very volatile and likely to be abandoned. So again, there's like 17,000, 10,000 altcoins. So a lot of them will probably just be forgotten, never see the light of day. However, it is possible, and there are a lot that do become mainstream and go from being basically worthless or free to being worth considerable amounts of like money. So something like Dogecoin again went from pennies and like fractions of pennies to being worth almost $1. So there's always a possibility, but I guess at that point it's up to your discretion. It's a bit more high risk, high reward. And then I guess I can read the chat. So for the last part of the meeting, however much time it's going to go on, I think the last activity, or I guess also discussion, if anyone has any questions. But after that, we're going to basically make our own. So if anyone wants to in chat kind of brainstorm and we can throw ideas around, if we were to hypothetically make an altcoin, what niche would you like to see filled? What current coins would you like to see for inspiration? What potential innovations would you like to see? Maybe more power efficient, quicker transaction speeds. We can just throw around ideas for use case, stuff like that, and maybe come up with like a hypothetical coin that could be, who knows, maybe the next big thing. So
Right, a few general questions. Is it okay to ask them?
Yeah, could you read them for me? Because for some reason I can't open up Zoom, so I'm just stuck on, yeah.
Yes, so you said that the computers are required to do complicated math when mining Bitcoins and some other coins. Why not make those computers make something useful instead?
Like, I don't know, a lot of the work is useful because again, like how many Bitcoin transactions are being done, all of that needs to be verified somehow. I guess the argument with proof of work based cryptocurrencies is that they're doing basically unnecessarily difficult work to keep the system
Right.
competitive, because only one person will win the block, only the person who solves it first. Therefore, the blocks are really big reward. The Bitcoin's worth a lot. So there's a lot of people trying to compete. So as a result, to kind of keep the system competitive, so it's not just, someone solving the block instantly, and the math that they have to do to solve the block gets more and more difficult. So that's why kind of the useless or the wastefulness comes in, because like the
But
extra difficulty,
isn't
but
it possible
that's
to,
why,
yeah, go ahead.
but that's why I was talking about, if we go back to this slide, proof of stake, instead of staking higher computer power, instead of staking higher computation, with proof of stake, there's actually like a way, which is what Ethereum is doing and what a lot of other coins are doing. Instead of staking basically computer power and energy with that, you're staking your own coins. So if you have over a certain amount of Ethereum, you can begin staking them. And then there's an algorithm which chooses who wins the block. So with Bitcoin, it's whoever solves it first, with like millions of computers trying to solve it first and kind of like racing for it. In Ethereum, if you have an amount staked, the more you have staked, the more likely you're going to be chosen. But basically the person to complete the block is randomly chosen. So there's no competitive there. Like it's just kind of random, but like with the chance of being increased if you stake more. And then like kind of the computation and the power draw at that point is only as much which is needed to run the system. So there's no kind of waste energy, and overall the system uses way less energy. So I
But
guess
so the
that's,
computers can be sort of, you have all those neural networks or computer networks that do something useful for banks, for researchers, like doing some calculations as to how proteins fold, or, so there is always a need for computer power. So I'm trying to think here,
yeah,
why
but there's
not
also a need
sell
for a
all that
financial system. Like
yeah, why
the
not sell
banks,
that computation power to something useful? So, and basically run them, keep the same system, but instead of solving abstract mathematical problems, solve something that is actually has some value. Do any of those coins do something like this?
of course, like they're a currency. That's like saying the bank system, which, the credit card companies run on, is
Right.
also
I mean, sell
abstract and
computers
useless.
to the bank. Yeah. So, allow
Or just
or
have like a decentralized, like I'm
yeah.
not saying that like the unnecessary abstract math is the best system, because again, there's like a lot of waste power, but we still need a financial system to send
Mhm.
money. Crypto is one potential solution. And again, we're seeing that there are ways to cut down on the quote unquote like waste power.
Yeah.
There's ways to optimize it, and one of those is, okay,
Yeah.
so I
There is
guess
a question from Dana
I
Jones.
see.
What
Yeah.
does staking mean?
So staking basically means, with proof of stake, I'll go into more detail. I'll pull up some information I have here so I'm able to give the full context.
Is it like in gold mining? You put a stake and say, this is my land and I'm going to mine here. Is it something similar?
Okay. So the problem, I guess, the origin of proof of work and proof of stake as a whole is with something digital. There's always a chance that people are going to try and exploit the system. And basically, when they're mining or creating blocks or processing blocks, there's a chance someone would try and modify the code and basically change what was supposed to be like a transaction to someone else, and basically make a fake block or modify the block in a way which would like send the money to them, or basically kind of steal and manipulate the market in a way which would create like fake Bitcoin, send it to them. So what proof of work and proof of stake try and solve is how do you make sure that all of the transactions are verifiable. So proof of stake specifically, the blocks are verified by people who own coins and people's computers who own coins, and the coins act as a collateral for the chance to validate blocks. So yeah, so for Ethereum specifically, to begin staking and to begin creating coins or to begin validating coins, you need to have 32 Ethereum before you can start being a validator. Because I assume if it's less, then that's not not a big enough risk to potentially lose. Because then people might say it's okay if I have 5 Ethereum, it's still worth it to try and manipulate the system. So there's a lot of different ways that proof of stake can work. I'm just reading here. So for a validator will verify the transactions and then add them to a shared block, which requires at least 128 validators to attest to. So once shards are validated and blocks are created, 2/3 of the validators must agree that the transaction is valid, and then the block is closed. So basically, whoever's making the block, it will be verified by other stakers. So it's if someone tries to make a malicious one, then it would be caught because there's other people who are also staking their Ethereum, who are able to kind of double check what was being done, double check the work, and if the work is fraudulent or if the work is incorrect, then it would be denied. And I'm assuming the stake that they had, which is why it has to be more than 32, would be lost. So I'm not sure if that.
Yeah, that makes
sense. It is a complicated topic. I don't know if I verbalized it the best way, but that's
there is another question. Another
Yeah.
question from Dana Jones. How do people become miners?
So there's kind of two ways. If we want to talk about Bitcoin, there's two different interesting ways they do this. So for proof of work mining, again, it's a competitive system. So if you want to actually win something or have a decent chance at winning something, you need a lot of computational power. And for a lot of people, that's not realistic. You can't like compete if you're just using a computer when there's like farms with, hundreds of thousands of computers in China doing the same thing. So for someone to become a miner, if you're just like on a personal level and you're not like investing millions of dollars into equipment, there's something called mining pools, in which basically millions of people or thousands of people work as one entity. They work all with all of their hash rate basically goes to one account, because then if it's that many people sharing computing power, then then that entity could compete with the big ones. And then it's called a mining pool because after that, if the big entity that they're all working basically together as wins the block, then the block's earnings will be divided against for everyone in the pool based on how much they contributed to it. So I don't know if that explained it, but basically you can work alone, and unless you have a lot of computational power, you're very unlikely to win something. But if you do win something, if you're working alone, all of the winnings go to you. But if you're working with a pool, then your computation is just a part of the pool. It all adds up into kind of one mining entity, and then the reward is distributed against the reward will be distributed to everyone in that pool based on how much they contributed to winning the block. So that's more realistic, but I think there's like a very small cut you get. So, but I think if you're just mining on a computer scale, then you can look up, it's really easy to do. There's like a lot of platforms. I don't know if you wanted to personally mine, but something like NiceHash will do that automatically. And you just basically click a few buttons and then begin mining. But again, like unless you have a very good computer,
so, but
you're not
do you need to install some software or go to some
Of course,
website
yeah, no,
to
it's all
sign up?
software, but like you don't even have to necessarily program anything or configure anything. It should be done automatically, but there are ways to be more in depth with it. I don't know if that was the question though.
There is a procedural question from Kendall Young. Are you going to share the recording of this session? The person probably needs to leave.
It will be, I guess we can send it out through email, but I don't know also if everyone here's in the Discord server, but it can be posted there as well as the first recording. So it will be shared.
Another good question, and I'm also interested in this. So are these coins or cryptocurrencies, are they used for anything sort of useful yet, like buying things, or are they purely speculative and people buy them and hope that the price will go up? Like, can I actually use it for something like what I would use the money for?
Of course. Well, I guess for one, there's regions and countries which Bitcoin and other cryptocurrencies is the official currency. So I think we're going to talk about that more next week with the guest speaker. But in El Salvador, the two currencies that they have with the country or in the country, which are officially recognized, is United States dollars and Bitcoin. So if you go there, it's not just what can you use it for or what businesses take it, but every business and institution in El Salvador is required to take it. So I don't know, I guess we can't say if that's going to be the trend, if there's going to be more countries which say, yes, we accept Bitcoin, or every business has to accept Bitcoin, but a lot of businesses are starting to take it. I guess if you go to like the more tech orientated cities, maybe not like, you know, the ones which aren't as big, but if you go to like LA, New York, at that point, you know, they're kind of always like technologically advanced. There's a lot of industry there, a lot of innovation there. So a lot of the stores, even if it's just like a food store or a taco stand, they'll also be a lot, almost all of them, which will have like the QR code, which you can scan to send Bitcoin and to do the payment. So with Bitcoin,
but still, wouldn't you agree that even though you can buy a cup of coffee, so to speak, you know, in some cities, most people seem to buy it for speculative reasons, not because they need it to buy goods. Isn't that correct? Or can you estimate what percentage of people buy the coins because they actually need the coins? Are there statistics like that?
I mean, yeah, like right now the majority is speculative investment, but I don't really like that. That is true. Like, yeah, a lot of it is
Yeah,
investment.
I've heard that some people actually need it for international payments. So for some countries, PayPal may not work, banking system may not work, and so simply sending money can be quite a difficult proposition. So whereas Bitcoin makes it very easy to send those payments, and then you just simply exchange it for the real, you know, dollars or whatever currency you use. So I know for some people it's a necessity, but I wonder how many of those are there. But anyway, that's a rhetorical question. I'm not sure if anyone has the exact statistics.
Yeah, no, I do think it's a majority for investment and speculation, but I don't think that detracts from the technology. And I think it's just because it's in its early stages. So I think that's expected. We have a question about the emails and the Discord link. So yeah, I'll have that sent out to everyone again who was in attendance. My bad that I didn't get that out earlier. And I don't know if we have any more questions related to the presentation itself, but I think we could be wrapping up soon. This was just a shorter meeting, but
So did you want us to do some, you said like activity design?
oh yeah,
our
yeah,
own
okay, yeah,
coin?
yeah. So it wasn't really an activity, but if anyone like wants to kind of brainstorm or propose ideas they have for their own altcoin. So I guess I'll go over one quickly. So one something I thought that was cool, or that would be cool, that kind of operates on the blockchain. It's not even really as much of a coin, but I was thinking about this and I heard someone speak about this and I thought it sounded really interesting. I don't know how many people in the meeting are gamers, like video gamers, but one reason gaming on consoles, I think, is interesting over gaming on a computer is because the games are on discs. So it was always really fun to trade the discs or be able to sell the disc back, because if you get a game on the computer, then it's almost all digital, so you can't really do anything with it once you buy it other than like delete it. So on console, I thought it was cool that you can like sell the games or trade the games because it's on a disc. So I thought if someone created like a basically on the blockchain, or I think at this point it's more of an NFT than a coin, but basically if games could come as a on the blockchain, then it would be really cool to be able to sell them and trade them as if they were like a physical product instead of just like something on Steam. So I guess the use case would be, instead of buying a game as like a disc, it's you still want it to be digital. There's still advantages of being digital, but instead of just something that goes to your account that you can't trade after, you'd be able to trade it and then exchange it with friends and maybe even sell it back for money or for crypto. So that's one idea I had, but I don't know if anyone else has like a financial need that they can't have met by regular money and that they wanted a certain crypto for, but there might not be any ideas proposed right now.
Kind of related to this, there is a question in Q&A
Yeah.
that asks you to explain the difference between cryptocurrency, blockchain, NFT, and smart contract. It almost seems like they're used interchangeably. And so can you explain what those are, what the differences, how they are related, but also maybe that will also explain, you know, ideas for new currencies or new cryptocurrencies.
Okay, blockchain is the general technology that everything runs on. when we were talking about proof of stake and proof of work, blockchain, like the blocks which are being created is what's being used to verify like the transactions and to run the system. There's like blocks which are ledgers. Like I don't know if I
Yeah,
can
so it's
look up
basically like a giant spreadsheet with all the transactions recorded. Is that the blockchain essentially? On multiple computers, as you said, you know, and they need to be all synchronized. And if you try to add something to it that is not on other computers, it will not work. Is that basically the idea?
in a sense, and like the kind of the peer-to-peer aspect when you hear that as well.
So when you say ledger, right, you mean like a gigantic spreadsheet with all the transactions recorded in it?
Essentially, it's a bit more complex, but like
I mean, obviously, but the idea.
Yeah, essentially, yeah.
And so what cryptocurrency is? It just like one type of that blockchain application, or is it something completely different?
Yeah, it is one type. So you mentioned what's the difference between that and like the smart contracts. So smart contracts is a completely different use of the blockchain, but instead of for coins or for currency, it's used to, like I said, validate agreements between people. So it's a different application. What were the other terms you mentioned?
NFT.
Okay, NFT. So that basically uses so again, the whole point of the blockchain is an argument is made or something like an electronic kind of decision is made, and the point of the blockchain is to verify that it's true and that it wasn't just made up, because computer code could be like injected at any point. So the whole point of the blockchain is to verify that this was a legitimate transaction. So for something like currencies, the blockchain verifies that this was a real transaction and this wallet has this amount. But for something like NFTs, I guess people have heard of them, but it can be used to kind of verify that this like digital item, this picture, this video, this PDF, there's only this many in existence, and who those ones in existence belong to. So it's just used to like the difference between, I guess, a PNG or a picture someone has a screenshot and an NFT is the blockchain verifies who has this NFT, who sends it to where, and that no one like kind of creates them out of nowhere. There's only a set amount, and you can't really just manipulate it into saying you have it when you don't. So that's, I guess, but again, we're going to go into like these specific terms in more detail later. This one's mostly just this meeting's mostly about altcoins. So I think we'll be more prepared with guest speakers who have a lot more context than I do.
Yeah. No more questions in Q&A.
Okay. So yeah, I guess before we wrap up, next meeting, I believe we're going to have a guest speaker who's going to talk about a lot more detail El Salvador and kind of the implications of crypto in society as a whole, like what that's going to do to decentralize and kind of revolutionize the financial system. So we're going to talk about that later. I'll send out the Discord links to anyone who hasn't gotten it yet, and the meeting recording as well will be posted to applicable channels. So yeah, I guess that's the conclusion to this meeting. It was a bit shorter, but I believe next time we'll have a full-length one.
Very informative. Thank you so much.
Yeah, related. All right. Okay, thank you, everyone. Have a good Sunday.